Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. So, how are you? I hope that everything's are okay on your side. Okay, so inshallah today we will discuss on the topic on the Islamic financial system. Okay, the overall system. Okay, let's move. Okay. So we have a three focus here. First, we discuss on the overview of economics or the financial system, and second one we discuss on the difference between Islamic and the conventional financial markets, and also the types of Islamic financial market. Okay. So these are the economic system. I think you have learned it during your secondary school. So in economic systems, basically we have two types of market. So which are the products market and also the factor market. Okay. So this product market is basically supplied by this production unit. Okay, we call production unit, and we have here consuming units. Okay, the group of people that consume the products, and the producing unit is where a group of people like a business and the governments, they do a productions of goods and services to supply in the products market. So where is the financial market? Okay, so the financial market comes in the intermediary. So between these two units of units, consuming and producing units, when they have a surplus or shortage, so the financial markets will appear to link between the surplus and shortage units. Okay, using their products lah, the product that they offer, like a financing product, investment products. Okay, now the producing unit basically will produce a good and services into the products market, and the consuming units will consume or will buy the goods and services in the market, and then the consumer units basically will supply their working hours, okay, their expertise into the factor unit. So what is the factor unit? Factor unit is the sources of factor market. This market basically will pull all the sources that needs by the production units. So like labor and what else, the materials, raw materials that they need. So they will supply to the producing unit to produce goods and services. Okay, so the flow of money will will circulate in the economy like this. When the households, they produce they become a labor to the businesses, they will receive incomes or salary. So the salary that they receive, they will buy a product or services in the products market, and then the money that they receive receive here in the markets will be profit for the production unit. Okay, so when they receive profit, so they will pay salary to the factor market. Okay, so these are the economic system overall. So after this, we will narrow down into the financial market. Okay, financial market. So what is financial market? So the financial market is the meeting place of two parties with mutual needs. They have similar needs. Okay, and then one party requires funds to support its financial needs, and the other has unused surplus fund, which it intends to invest for the purpose of attaining returns or income. Okay, so in order to ease the process of the meeting of these two parties, banks or the intermediary or financial intermediary will comes in the middle that will connect these two parties, the surplus and the deficit unit. Okay. So what the surplus of funds basically coming from a person or business. Okay, they don't have without investment opportunities. They don't have investment opportunities. Basically, this Okay, they lend or they will save money in the bank. Okay, the shortage of fund, person or business with business idea, okay, or investment opportunities, they will borrow and spend money. Okay. Um, so the financial market is basically their roles is to use the fund, the surplus of funds, in order to meet or to give that surplus to the shortage parties lah, the shortage of funds. So it proves the economic efficiency, which enables higher economic activity. Okay, so let's move. So the rationale to have a financial intermediations, you just imagine that if we have a surplus money and then the other party or our friends don't have a money, so and then group of people over there don't have money, and without a bank, how we and they wanted to meet, and how we can help them. Okay, financial intermediation is very important. It may increase efficiency. Okay, it may increase efficiency because of the banks. They have expertise. They are just their focus, the business focus is to collect a fund from the surplus unit, and then they will structure certain products that will fulfill the needs of the other party, other customer. Okay, so it will actually increase efficiency lah, by reducing transaction costs, including information gathering and search of costs. Okay, and then more optimal allocations of resources, better matching of surplus and deficit unit, because among us we don't know what is your needs and then what about others need, because in this world we have billions of people, so how these people wanted to meet each other in order to to fulfill their needs. Okay, so the bank will come. Okay, then we'll do arrangement between the customer. Okay, and then by offering a certain products, the banks can fulfill a consumer needs. Okay, whether coming from surplus and deficit unit. And then in terms of regulations and monetary policy, more centralized monitoring, control money supply. Okay, so centralized lah, because the bank actually the intermediary. Okay, they are the like in Malaysia, all the banks is actually controlled by Central Bank of Malaysia. They are centralized the monitoring process, so that the bank or the government can monitor the overall financial system efficiently. Okay, and then government social objectives, substantial financial resources can be marshaled and channeled to priority economic sectors. So directed credit. Okay, so government also can participate into the system, because basically the Central Bank of Malaysia under purview of the Ministry of Finance. So in order to ensure our economic system or our financial system is under control, so the government can they can give portions of a budget, the government budget, to the central bank in order to distribute to the society. Okay, like a B40 group, they have a certain incentive to the B40 group. So how to manage this? The effort, social effort. So we have the financial intermediary that will meet the customer. Okay. Okay, so now the funds flow through the financial system. So in the financial systems, we have financial intermediary like a bank. Siapa lagi financial intermediary? Biasanya bank or investment bank, because bank we have many types of bank lah. We have investment bank, we have corporation bank. Corporation bank like a bank rakyat. Okay, investment bank like Kuwait Finance House, that bank that's specific to the investment. And we have a commercial bank Like a normal bank is commercial bank lah, like a Maybank, Maybank Islamic, CIMB Islamic, like Bank Islam, Bank Muamalat, all of them are commercial bank. Okay, so they are financial intermediary. They are intermediary lah. So they receive a profit by giving a service to the customer, by offering a certain products to the customer. Okay, so as financial intermediary, so they will connect the surplus unit and deficit unit. So these are the surplus unit, meaning that they have money. Okay, they don't know what to do with their money. Rather than they just keep it under the pillow, it is unsafe. So now we have a banks that can safe keep our the money on behalf of the household, on behalf of the surplus unit. Okay, so the units here we have households like us, business firms, government and foreigners. Okay, when they have money, they want to ensure their money is safe, so they will give or channel or safe keep their money with the financial intermediary here, a bank. So the bank will collect all the funds here, and then they will use the funds to help the surplus unit. Okay, not just help in terms of charity, no. So they will use their products like financing products in order to supply money to the deposit unit. So we have a deposit unit like borrower here. It can be business firms, they borrow money. Government can also borrow money from the bank, households and foreigners. Okay, so the fund here, okay, when they save money, the banks will put their money at financial market. Okay, financial market. Okay. So same lah. Then in the financial market, okay, we have the financial market lah. Okay, because the bank also, they will not just keep the money at the bank physically. They will for sure will invest all the money they collected from the lender here, from the household, and then into the financial market. From that they lend the money to this one. Okay, okay. So for sure they offer a variety of products. Okay, they can have a financing product or normal deposit products or investment product. Okay, so later on we will discuss what types of product they offer to the surplus unit here. Basically, we have a deposit and also we have investment. Okay, and deposit we have also two types of deposit. Deposit is like just a deposit, and also fixed deposit. Just to give the customer a portion of profit from the deposit. Okay. Okay, let's move. Okay, what's the difference between Islamic and conventional financial market? So, basically, a major characteristic of Islamic financial system that are different from conventional financial system. For sure, the law that the Islamic system follow is the Sharia law. So everything that is offered in the market, the practice, the business practice, the product that they offer must comply with the Sharia. So the main source for the Islamic financial system are the Quran and Hadith. Okay, and the secondary sources like Ijma, and then Qiyas. Okay, so and then whereby the conventional market, they don't have like us primary sources. They just referring to the man-made law lah. Okay, the law that they have. So conventional financial market does not have any restriction in doing business, and its sole motive is profit maximization. So the aim for the conventional system is profit maximization. They can do anything, uh, anything that they like in order to maximize their profit. So for the Islamic financial market, we can't do anything in order to achieve or to maximize profit. The profit that we gain must be Maksudnya we have to acquire the profit with a proper way, following the Islamic rules. So it is based on secular and material benefit that has low priority on ethical consideration that benefit the society. So this is the conventional market. Okay, and then money is treated as commodity and trading of money and money is allowed. Okay, meaning that they can gain a profit by selling a money. Okay, so in Islam we can't get a profit by trading a money. Okay, we only can get a profit, we are only allowed to get a profit from selling trading of goods and services, not from money. Money is only just a medium of exchange in the transaction. Okay, so that is why, like apa nama dia, currency exchange like a forex, trading of currency is prohibited in Islam because we cannot trade money. If you are trade money, so it will bring a bad effect to the society later on because people will only looking money rather than trading of do trading for good and services lah. Okay, so Islamic financial system should comply to the requirements of the Sharia. They must not contain the three prohibited elements that we have discussed before, which are riba, gharar, and maisir. And also investment is only on the permissible business, okay, allowed by the Sharia. It should not involve any prohibited activities like interest, liquor, gambling, pornography. Okay, no. So all the unethical element is totally prohibited in Islam. Okay, so these are the differences between the conventional and Islamic financial market. Okay. Okay, so types of financial market, we have a money market, we have capital market, we have futures market, and we have mortgage market. So what is money market? Okay, so money market is where short-term instruments are being traded, having maturity of less than a year. Money market lah, like macam lending and borrowing for a period of less than a year. Money market. So like the practice of do saving, it is in money market lah, banking practice tu. Okay, it is money market. Capital market where long-term instruments are being traded having maturity of greater than a year. This one involve investment. It is capital kan? Capital is a modal. So where people have put a capital and to wait a longer time in order to gain a profit. Okay, and then futures market is future. Okay, it involves a contract of future delivery of currency, securities or commodities. Okay, mortgage market, financings of real estate. So market that involve with mortgage. Mortgage tu kan property. Okay, financing like a financing of real estate or housing. So it is a mortgage market. So, Islamic money market instrument in 1994, Malaysia established an Islamic interbank money market. What is Islamic interbank money market? It is a interbank like a Maybank Islamic with CIMB Islamic Bank Muamalat with a Bank Islam. They do a transaction between them. Okay, like a transactions of they have shortage of money, one bank, and then they lend a money from other bank. They borrow money from other bank or lending and borrowing lah. Okay, so it is short term, maybe only 1 day or 2 days. Okay, they just borrowing the money from other banks. Okay, then Islamic interbank investment, they invest. One Islamic bank invests with other Islamic bank. Okay, and then interbank check clearance system. So this one, the purpose is for to clear the check lah, check clearance system between a bank, interbank. Okay, like you receive a salary, check, in check salary. So the check is basically under one bank, like a Bank Islam, but you have an account with Maybank Islamic. So how they want to clear the check? So they have interbank check clearance system. They will clear your salary, and then and then channel your salary to your account, which is Maybank Islamic, something like that. Okay. So this example of Islamic money market instrument. Okay, basically the transaction between bank. So currently interbank trading of Islamic financial instruments and mudharabah interbank investment. Banks among them pun dia do a investment. Okay, so they facilitate the liquidity needs of interbank participant. Liquidity is basically okay, the how we can change investment instrument to cash. Okay, so liquidity is how period of time that we can change cash. We have a instrument, investment instruments like certificate. So we want to get a cash, then we call liquidity. Okay, so facilitate the liquidity needs of interbanks participant, meaning that it facilitate the needs of cash. Between bank. Like say bank, because bank they not only deal with cash, they actually deal with a credit or a debt. So when they are having shortage of cash, so they can borrow cash money from other banks so that they can increase their total of cash on hand at the bank. Okay, so for banks requiring funds, they will borrow. For banks with surplus fund, they may purchase the financial asset or they may invest at other banks. Okay, so this is Islamic money market instrument. Islamic interbank money market. Okay, Islamic interbank money market. It is interbank trading of Islamic financial instruments. Islamic financial instrument ni like a investment lah. Okay, instrument is macam certificate that represent a cash. So where banks trade among each other using Sharia-based financial instrument, they will have when they want to perform this transaction, they cannot just perform like that. They have a specific products. Okay, Islamic interbank money market products. They will use that products lah in order to supply or to give cash to the other banks. Okay, based on mudharabah contract. So in this case, they use a mudharabah contract where deposit banks obtains investment from surplus bank and will share the profit with the surplus. So deposit bank, the bank that require a cash, okay, they will receive investment from other banks that have a surplus of money, and then later on they make investment, they will share the profit because mudharabah is a profit sharing contract. So for example, government investment issue, initial issuance based in governments also can borrow money from the bank. Basically, the government will issue a bond or they will issue an investment certificate. Like this one, initial issuance based in Qardul Hasan principle. Investor will receive hibah, not tradable, as Qardul Hasan does not allow reselling of them. Now it is based on Al-Ba'inah. Okay. So this is example lah. And then BNM negotiable notes. Bank Negara Malaysia also will if in case they need money, they can borrow from the banks. And if the banks need money from Bank Negara also have products, Islamic interbank product. They also invest at Islamic banks at other banks. Okay, they offer negotiable notes. Then Islamic accepted bills, Islamic negotiable instrument. These are kinds of investment. Okay, interbank, Islamic interbank investment, either from the government, from the Central Bank of Malaysia, and also among the banks. So basically the period of investment from overnight to 12 months. It is short-term investment. Rate of return based on rate of gross profit before distribution for 1 year investment depends on the banks. Then actual return will only be calculated at the end of the investing period. So there are also Islamic interbank deposit facilities. based on what they are principal. So the banks also can have a deposit account with other banks. So as a method to absorb any surplus liquidity in the Islamic banking system. So Islamic interbank money market instrument is basically a method to absorb any surplus. Because in our financial system, it is not good to have shortage of money, and it is also not good to have surplus of money, meaning that or liquid too much cash or money in the market. So the situation must be stabilized. Okay, when one bank have surplus of money or cash, they will make investment with other banks. Okay. Okay, next is capital market. So what is capital market? From the word capital, it brings the ownership or money, the startup money. So capital market involve long-term investment. If short-term investment, we call it as a money market. Long-term investment is basically under capital market, which maturity of greater than a year. Okay, maturity greater than a year. So the purpose is to channel a savings into long-term productive investment. Okay, the more we invest, the more profit that we will gain. But however, the risk also high compared to the long-term investment. Okay, so it issued by large corporation and government. So in the capital market, basically the participants are corporations and government, not the individual participants. So two major instruments in this market, which are debt-based instruments and equity-based instruments. So what is a debt-based instrument? Is substantial financial amount tradable in secondary market. It's debt lah. So debt So like when we do investment, when the corporation do investment in capital market, it is just based on debt. One party borrow from the other party. Okay. Basically debt-based instrument is represent the conventional practices lah. They can practice debt, and then they can acquire profit from debt. Okay, so like a bond. Bond is conventional debt. Bond, discount bond. Okay, so for the Islamic capital market, we call it sukuk. So bond is meant for conventional debt capital instrument. So how about equity based instrument? So it represents share of ownership. Equity represent ownership. When we invest, we actually own a portions of that investment. So like a stock, share certificates. So bond and stock. What's the difference between these two? Okay, stock is equity-based instrument. Bond is a debt-based instrument. So the difference between these two are, the first one is in terms of role of investor. So role investor for bond, it become a capital provider. Okay, they are the debtor. Okay, and for the stock, they are the owner because they represent ownership. Okay, so just remember debtor and shareholder. Okay, owner of the investment. So payment, fixed payment. The company is bound by law to pay annual interest in accordance with the terms made at the time of the issuance. So fixed payment for the bond. Okay, and then how about the stock? Profits. No fixed payment for share because they are sharing the ownerships of the business. So need to wait until end of maturity, the period of maturity of the investment. Then the company will calculate a profit for the stockholder or shareholder. Okay, so profits. Board will determine whether or not to pay dividend to stockholder. They call it is dividend. So for bond, it is interest payment, fixed interest payment. If the company promise to pay 6% of interest for certain amount of investment, it is fixed. Yearly, they will receive this 6%. But for the shareholder or the stockholder, so it depends on the performance of the business itself. So board of director will determine how much percentage of dividend they want to distribute to the stockholder later on. So in terms of in case of default, so For the bondholder, because they are the debtor, in case of default, so it will be prioritized lah. They will receive a claim first. Okay, based on the amount that they lend to the company, to the investment. Okay, and then the stockholder, residual claimant, liability limited to the value and total shares of own. So they have a liable to the business. But for the borrower ni, the debtor ni, so whatever happens, they will receive their capital. But for the shareholder or the stockholder, so it depends. There are two types of shareholder, the limited liability and unlimited liability. So limited liability, they are liable to whatever loss happen to the business. Okay, limited, but the value of losses depends on their capital. For the unlimited shareholder, so it is unlimited to the capital that they provide to the business. So whatever loss, they have to bear the loss lah, in case of default. So now Islamic capital market. Just now we discussed about conventional capital market. We have a bond and we have a stock. It is between a debt based instrument and also equity based instrument. So Islamic capital market. The development of Islamic capital market has been guided by the long-term strategy outlined in countries. Basically, capital market under purview of Securities Commissions, not the Central Bank of Malaysia. For sure, Islamic capital market, the Securities Commission under Bank Negara, but the Securities Commission is specialized to monitor the development and then the practice of Islamic capital market in Malaysia. Okay, so this is outlined in the country's capital market master plan, one in 2001 and two 2011. So to establish Malaysia as an international center for Islamic capital market activities. So being accounted for 2/3 of global sukuk outstanding as at September 2007. So because in Islamic capital market, the famous instrument is a sukuk. Sukuk is Islamic bond. So it is Sharia compliant stocks comprising about 86% of domestic stock exchange. When we say it is stock, it is meant to be a equity based instrument. So the market offers a deep pool of Sharia-approved equity securities with accompanying benchmark index, Islamic bonds and Islamic unit trusts. So other conventional products such as warrants, call warrants, crude palm oil, future contract and asset-backed securities are also deemed to be Sharia-approved. So the growing popularity of such securities has led to the productions of the Kuala Lumpur Sharia Index in 1996. So we have the Sharia Index that is actually monitor the performance of Islamic equity market, Islamic capital market. This one a very long, I think very outdated data. So the percentage of Sharia compliant stock is 84%. Percentage of non-Sharia compliant stock is 60%. So I believe that this the number has increased lah. So Sharia compliant stock in Bursa Malaysia. This one, Sharia compliant stock in Bursa Malaysia. We have the consumer product, industry product, the mining, construction and trading services. So approved security, total security, percentage of approved security, high percentage. So screening methodology for Sharia compliant stock. So in order to ensure that the stocks, Sharia compliant stock is always comply with the Sharia. So the Securities Commissions basically have established a framework or screening framework. So screening frameworks, they screen the investment activities of the company. So currently there is no international Sharia standard for stock screening, but Securities Commissions have provided a framework for stock screening. So different funds or fund managers utilize different standards. So in Malaysia, it is issued by Sharia Advisory Council of Securities Commissions, because this council is under Securities Commission. Their responsibility to observe that all the stock, the Islamic capital market, the Islamic stocks is comply with the Sharia lah. Okay. And then Dow Jones, there's even all the index that they have, namely FBM Hijrah Sharia Index and FBM Emas Sharia Index. So global level, there are Dow Jones Islamic Market Index, FTSE Global Islamic Index Series. So these are all the index for Sharia stock. Okay. Basically, there are three criteria provided by SC to screen the stocks, okay, for the Islamic capital market. So the first one, the central level, so screening based on core activities. The first one, core activities. Second one, benchmark of tolerance for mixed activities. So if the first one, they will screen in terms of the core activities. If core activities is 100% Sharia compliant, so the stock already passed. But in case of the investment activities consists of mixed activities, like a hotel, businesses, that is a part of they provide accommodations to the customer. They also have a alcohol business. They are the bar, usually at the big hotel they have a bar that sell liquor, meaning is that it is a mixed activities between halal and haram. So SC in this case have provide a percentage of screening lah, okay, for this investment. So tengok, I think maybe at other topics I will discuss in details what are the screening process. Okay, and then now we just move to sukuk or Islamic bond. Okay, what is sukuk? Sukuk is Islamic bond. Literally means written document, a document or certificate which represent a document or certificate which represent the value of an asset. Okay, sukuk is basically certificate evidencing the holder's ownership in one or a number of assets. Okay, it is investment certificate lah. When, like say, when we want to make investment, we transfer money, they will give us a sukuk certificate. Okay, because sukuk is equity based instrument, it represents the value of an asset or ownership toward an asset lah. So in Islamic finance, taskik, the word sukuk from taskik, sukuk, which means process of dividing ownership of tangible asset, usufruct or both. Basically, sukuk, when the company wanted to offer a sukuk, meaning that they actually collect a fund lah, investment from the public, from the company. So when they want to offer sukuk, that sukuk must represent a certain project, asset, the project that have asset. So investment sukuk are certificate representing shares in ownership of tangible asset, like macam project nak guna hospital, to build a school, to build a refinery. Okay, so they collect a money to invest into that project based on sukuk. Okay. Okay. It represent ownership of the asset. When we invest, it represent we actually own the asset. Okay. So our fee, this is our fee. Accounting and auditing organizations, dia ada kat sini, Islamic financial institution, ada tertinggal I kat sini, defines 14 types of sukuk. So there are types of sukuk based on types of product that adopted by the sukuk. First one is ijarah. Ijarah sukuk is the famous one. Ijarah sukuk based on ijarah contract. And then certificates of ownership of usufruct, sukuk manfaah al-ijarah. It represents the utilization, the manfaah of the asset. And then salam sukuk, istisna sukuk, mudarabah sukuk, murabahah sukuk, and musyarakah sukuk. All of these are Islamic contract lah. So the features of sukuk, okay, basically sukuk is asset backed sukuk. They must be backed by an asset. Okay, it is not like a normal investment. The investment company must build a certain asset that represented by a sukuk. So give stable income to the investor. The certificate of sukuk can be tradable, is tradable, and then Sharia compliant trust. This is Sharia compliant lah, trust certificate. So what is trust certificate? When we invest, we are entrusted. We entrusted the company that the trust company to do the investment on our behalf. So not simply a claim to cash flow, but an ownership of claim. Okay, not only like a bond, we want to claim back our capital, our money, our investment. No, it represents ownership claim. So return derived from yield generated by client lease of the asset. So the return though it is not profit from the selling of the asset. No, it is based on lease of the asset, like a sukuk for based on shopping mall. Okay, so the shop lot in the shopping mall will be leased out. So rental or leasing profit will be distribute to the sukuk holders. So the return or the profit is apa namanya return from the leasing profit. So the Sharia legitimacy also lies in the fact that they do not take advantage of interest rate movement to do with interest rate. So it is based on the rate of rental. Okay. Okay, like a bond, it is interest rate. Simply, okay. Sukuk are directly linked to real sector activities, will not create short-term speculative movement of funds and potential financial crisis in long term. Okay, so investing in sukuk involve funding of trade or production of tangible asset, asset yang kita boleh nampak. So different between sukuk and bond. Bond is Islamic bond kan. Sukuk bond is bond lah. Bond is conventional bond. Okay. And then sukuk is Islamic sukuk, Islamic bond. So represent ownership stakes in existing and or well-defined asset. But bonds represent pure debt obligation due from issuer. Pure debt. So underlying contract for sukuk issuance is permissible contract, which is all Islamic contract, and then core relationship of the bond is loan money from the investor to the business owner lah. So underlying asset monetized in a sukuk issuance must be Islamically permissible. So the asset also must comply with the Sharia. Cannot issue a sukuk to build a wine factory. No. Okay. So the business also, the building also must be for the sake of the good purpose lah, for the Sharia, comply with the Sharia. So bond can be used to finance almost any purpose which is legal in its jurisdiction lah. Maksudnya legal from the worldly, from the Islamic legal perspective, but not necessary to be legal from the Islamic perspective lah. So legal in Malaysian. Okay. So asset related expenses may attach to sukuk holders. Ada any expenses attached to sukuk holders because they are actually hold ownerships, and then bond holders are not concerned with asset related expenses. No asset because they are purely a debt. So sukuk prices depends on market value of underlying asset apart from obligors creditworthiness, and then for the bond price depends solely on issuer creditworthiness. Maksudnya the issuer is the business that collect money for the investment. And then so sale of sukuk represent a sale of share of an asset. Sale of bond is basically the sale of debt. Kan? Kalau kita, if you want to sell out the bond, the bond certificate is basically we sell the debt. Okay, but for the sukuk is actually sale of a share of asset. Okay, advantage of sukuk. Okay, creations of wider investor base because of its acceptability by the global investing community. So 48% of Qatari sukuk came from conventional investors. So advantage. wider investor. So it can receive investment from conventional or Islamic investor, okay, provided that the asset is compliant with the Sharia. So Islamic Sukuk plays an important role to place Islamic banks and financial institutions on the map to show how innovative they can be by combining different Islamic principles to create Sharia compliant products. So bank also can issue Sukuk, okay, to start a new project. So by issuing Islamic Sukuk, much needed liquidity is brought about by Islamic financial institutions, and mobilized funds could be used in constructing or developing of project and tangible asset. Okay. Okay, forward and futures. I think this one should be discussed for later on topics. Okay, because forward and future quite complicated. Okay, so we have to discuss deposit products, financing products. Okay, this one I will put later. So forward market, future market, mortgage market. Okay, so maybe just a brief. This one because under types of financial market, what is forward and future market? So forward and future market is to enable participants in the markets to offset their price risk in future transaction which involve money, security or commodity. So all the product is forward and basically it's for risk management or risk mitigating future risk. Okay, so our contract of for deferred delivery of underlying asset. The underlying asset can be physical asset, and then it is forward and future contract. Like a macam contract tu, it will be executed in future. Okay, but the price of that contract is fixed now. Okay, it is for the sake of risk mitigating. So we call forward and future products. Okay. Okay, basically meant for trading lah and investment. Mortgage market that deal with a mortgage or real estate property. Okay, like a long term loan for financings, home financings. Okay, this is a mortgage market, refers to the market that provide finance for real estate. Real estate loans are normally issued by various type of financial institutions. So bahasanya semua banks ada offer home financing. So basically offered by commercial banks, savings and loan institutions and cooperative institution. Koperasi institution is bank koperasi lah. Okay, so repayment varies depends to a large extent on the lending institution. So it depends. So and then Islamic banks offer property financing based on the Islamic principle like ijarah, musyarakah, BBA, and then nowadays we have a tawarruk contract for the home financing. So Islamic mortgage market still underdeveloped. No Islamic financial institution has used real estate financing in sukuk issuance. Okay, so basically, kalau is for the Islamic home financing, yes, we have many. Okay, okay. I think because maybe this is quite outdated, so nowadays we actually have many Islamic home financings, and then sukuk pun is actually issued to finance a certain real estate or certain buildings. Okay. Okay, now what is financial institutions? So financial institutions is in general, the financial institutions are middlemen or financial intermediaries that connects the surplus unit with deficit units in the economy through the indirect channel of funds flow. Like I mentioned before, so financial institution become financial intermediary that connects between surplus and deficit unit. Three types of financial institution: depository institutions like a bank, contractual saving institution like insurance, and then investment intermediary like a unit trust. Ni pun unit trust institution pun financial institution juga like macam ASB, PNB Permodalan Nasional Berhad. They are a body that supply a unit trust for the investment. Okay. So Islamic financial institution, while the perceived role of Islamic financial is like the financial intermediary, so there are glaring difference between IFI and conventional. So the difference between the conventional and Islamic financial institution is Islamic financial institution is governed by the Quran and Sunnah, by the Sharia, Islamic law. And then types of Islamic financial institution, Islamic banking institution, Islamic bank, contractual saving, takaful. Okay, and takaful also the main role for takaful or for risk management. They also provide options to have a saving, and investment intermediary, Islamic unit trust or Islamic investment bank. Okay, we have import and export banks also that intermediary for the trading purpose. We have import and export bank, and then we have bank apa lagi? Bank Rakyat is starting from Corporation Bank, and also we have Bank Pertanian. Okay, Bank Pertanian, now known as Agro Bank. The purpose is to cater needs of farmers, okay, for plantation, for farming activities, and also we have a small and medium bank (SME) to cater for the financing small and medium enterprises or businesses. Okay, and then now the supervision of financial system. So in Malaysia, we have centralized supervision, which is by Central Bank of Malaysia, that supervise the Islamic financial system or conventional financial system in Malaysia. So in Malaysia, we have a dual system, conventional and Islamic system. Okay, it is supervised by Central Bank of Malaysia. Okay, just for the Islamic capital market or the capital market, so the central bank give authority to the Securities Commission to control the market. Okay. So nampak ni, financial institution, central banks, financial market is a Securities Commission. Okay. So I think that's all. Okay. That's all for today. I hope that you understand today's topic. So basically, we have discussed on the economic system general, and then we narrow down to the Islamic financial system, and we discuss the roles of financial system. And then in the financial system, we have markets, we have money market, we have capital market, we have futures market, and also we have mortgage market. Basically mortgage market tu dia macam dah termasuk, it's basically included in the I think the money market lah. Memang basically mortgage is run by the bank offer financings to home for the real estate home financing. Okay, and then we have discussed about the difference between financial instruments, between sukuk and bond, the difference between the Islamic and the conventional market, the difference between the apa lagi apa lagi okay, that's all. And then the roles of bank as intermediary. Okay, so I hope that you are clear with this topic. Okay, inshallah we will continue. Inshallah we will continue next topic next time. Okay. With that, thank you. Assalamualaikum warahmatullahi wabarakatuh. Take care.